Good morning, everyone. Today, this is our first session for the meeting with the investors. We'll be presenting a brief highlight about the corporate overview, about the company, and the strategy that we have for the business plan cycle. And then we'll also give a brief presentation about the financial results. First, our CEO, Mr. Roman Tavacha, he will give you an overview about the corporate structure and an initial background about the company. Over to you, Roman.
Thank you, Muzammil. Good morning, everyone. So, since it's our first investors meeting, we will go through a quick introduction about our company and the overall strategy for the business plan. So, we can move to the first slide, please. So, the first slide is about our vision, mission, and values. As you can see on our vision, we are trying to provide more than reinsurance protection. So our services goes beyond that, than the capacity itself. It goes to training and services and sharing know-how with our partners. In our mission, innovation is built in our mission. So we try to innovate in all the processes during our services to our partners. And values, we try to always align our values with our vision and mission, especially when it comes to transparency and openness. Next. Our board is formed from 7 directors. 4 of them are independent. Dr. Juma bin Ali Al Juma is our chairman. He's independent, and his deputy chairman, Sheikh Nasser Al Thani, is also independent director. And then we have Mr. Kamal Tabaja representing one of the main partners in the company or shareholders. We have Mr. Jamal, also he's an independent. Dr. Said Mohammed Busaidi is an independent director. Muhammad Laila representing main shareholder, and Mr. Pramod Iran also is presenting a main shareholder. Next. So this is our organizational structure. We have 3 oversight committees: the risk committee, enumeration and remuneration committee, audit committee. The committees required by regulation are 2, mainly the audit and the enumeration and remuneration committee. We also have 3 independent functions which reports directly to the board: the internal audit, legal and mainly the compliance function, and the risk function. Those are 3 independent functions that report directly to the board. Our operation is based mainly on 2 columns. One is for the core operation, which covers the underwriting, technical accounts, claims, etc. And the other column is for the support services, including human resource, finance, and asset management, etc. The management committee of the company, or the top management, are 3 persons: myself as CEO, Mr. Khalid Mary as Chief Operating Officer, and Mr. Muzammil Hussain as Chief Financial Officer. This is a summary about the past 5 years results. We are showing the gross written premium and the profitability of the company since 2017. And as you can see, both the premium and the profitability are growing year after year. Last year, 2021, we closed with a premium of 27 million 27.6 million Omani riyal, and with a profit of 1.355 million after tax. Our strategy for the during the business plan cycle, which is currently we call it broadening our horizon for profitable growth, and this is mainly to enhance our business profile in our home country and in the region. And in order to reach that strategy, we need to take care about or keep growing profitable. We started launching regional offices. Our first office started in Qatar last year. We are working on improving our rating. Financial rating. We are currently rated double B plus by Fitch, and double B plus by Fitch, which is currently one notch above the sovereign rating of Oman. We are trying to enhance our lead position by leading more business showing to us. So, and leading business, that means we put our terms and conditions. Diversification. Diversification here means by type line of business. So increasing the other to keep diversified the lines of business we are writing. Currently, we are focusing on property, energy, onshore, marine, and engineering. So we are working on keep providing more lines of business to be written by us, and also diversification by geographical scope. So we don't have one country or a few countries dominating our portfolio or from where the business is coming. Optimizing of efficiencies, this is something we keep working on it, especially with the technology change. So we are trying to update we keep updating our infrastructure when it comes to technology and digitalization. Enterprise risk management is very important in our business. So this is embedded in the culture of Oman Re, and it's a continuous process. Strengthen human capital. We are focusing on developing our staff and employees by providing training and exposure, whether to our employees in the company and also to the local, sharing knowledge with the local market. Key projects, we are working on them or we finished some of them. As I said, we'll start with enterprise risk management. It's a continuous process across Oman Re. So we keep working on it, and it will be always there, and it's embedded on the culture of Oman Re. Ritakaful window. This is a project where we are hoping to materialize by the end of the year or early next year, where we will be having a window for writing Ritakaful business, which will be under the supervision of the Sharia law. It will be complying with the Sharia for the reinsurance part. Natural catastrophe. Currently, we are leading a project for the Omani market for forming a pool to pool in it all the natural catastrophic perils, and this is becoming very important to Oman since we are becoming more and more exposed to natural catastrophe, especially rain and flooding. Gain efficiencies, process improvement, and technology. We have few projects we are working on them, and one of the main projects or key initiative will be for the next 2 years is updating our pure insurance system. Rating improvement. We as I said, we are currently rated double B plus by Fitch, and we are one notch above the sovereign rating of Oman, the country Oman. Since recently Oman was upgraded from double B minus to double B, we expect also this is will have an implication, our positive implication on our rating. We are investing in our brand in the in Oman and the whole region to be more recognized as a main reinsurance player on the region. Thank you for this part, and I will leave the floor to my colleague Muzammal to share with you the financial position of the company.
Thank you very much, Roman. We'll cover our first half results. In terms of overall top line, we had generated a growth of around 20% compared to last year, 2021. So we reached a number of 21.9 million gross written premium for the first half. We expect to achieve another 10.1 million for the second half. So we're planning to close the year at roughly around 32 million, but that's a projected number. But as of now, as of today, we feel very comfortable that we'll be very close to this number. In terms of our combined ratio, which shows the profitability of the company, the June 2022 combined ratio has been very good. We were at 96.2% compared to 97.6% of last year. So we have seen a reduction in the loss ratio, roughly 2.3%. The commission ratio went up to around 3.2%, but the expense ratio went down by 2.4%. So overall, we have seen two positive areas. One is the loss ratio and one is the expense ratio, and the commission ratio slightly going higher compared to what we were expected. Profit after tax is very much similar to last year. We achieved 673,000 compared to 668,000 of last year numbers. And we'll give you a detailed background that the numbers might look it's very much similar, but underlying profitability of the company in terms of the core operation has been improved significantly. The This is just a detailed breakdown of our first half results compared to the actual number of last year. We've seen growth in the GWP. We have also seen major growth in the net underwriting results after management expenses, which increased to 451 compared to 204 of last year. The overheads are slightly increased, but that's very much aligned with what we expected. And as a result of the overall growth in the top line, investment income is fairly stable, and this is considering that the first half it was a very volatile investment market overall globally, and our major portfolio debt has been incurring some unrealized losses. But even that, the underlying interest income has generated was very good. And we expect that our running yield is going to continue to improve as we close the year. The major factor was the forex loss. We incurred around 354,000 compared to 111 of last year. Mainly, this is on account of the devaluation of all the currencies against the dollar. So we do write a lot of our business in emerging market currencies, and we also have some exposure in the euro. So that's resulted in a loss in the forex side. But overall, if you see, the net profit before tax was 814,000 compared to 789,000 of last year. Taxation is slightly on the higher side, 141 compared to 120 of last year. And if you see, after tax profitability is 673, very much stable compared to last year's 669 number. So if you see the key variances, if you see what is contributing to the overall change compared to last year is we have positive change coming mainly from the underwriting results, which is a very healthy sign, and also investment income has been stable with a minor growth. General and admin expenses is negative variance, but that's something that we understand and it's very much within our limits that we've set, and this is part of the growth that the company is going through. Uh, the main thing that was the forex loss, which was unexpected, and it is a global phenomena. The strengthening of the dollar has contributed to this forex loss, but we expect that this will not be something a consistent factor going forward. We expect the dollar is continuing to strengthen, at least for this year, but after that, it is going to stabilize. The other factor was income tax expense was slightly higher, and mainly is that because the forex loss is mostly unrealized, so that is not considered when we're computing the income tax calculation. So that was a main factor that income tax expense was on the higher side. Overall profit after tax was 673 compared to 668 of last year. In terms of a statement of financial position, this is a more of a management view, the way we see different assets and liabilities. So we've seen growth in our cash and bank and investments. Even if we consider the impact that is coming mainly from the unrealized losses, the overall cash position and cash generation of the company has been very good. In terms of our technical funds, which is our technical provisions, they are going up. It's up by 7.4 million compared to, we were at 69.9 million compared to 62.4 of as of December. Net equity position has gone down 1.1 compared to December position. This is on account of the unrealized losses, mainly on the debt portfolio, but there is also some portion coming from the equity side. So these are the key elements that we consider in our balance sheet. Uh, that's all from our side. If anyone has any question, we will be willing to take now. Hi, Aisha. Do you have a question?
Hi, good morning, gentlemen. Thank you very much for organizing this investor and analyst conference. I have two questions. My first question is, what kind of customer concentration do you have on your balance sheet side? And the second question is, what kind of dividend policy does the company have?
Okay. In terms customer concentration, I'll just give you an overview is that as a company, we don't, as by policy, we don't want to have any sort of concentration on our book. So you not see a major portion of our revenue generated from one particular customer. The concept is that we have to diversify by customer and also by line of business and by territory. So even let's say if you want to write from one particular country, we try to not to write beyond 7 to 8% from one particular country until it's a core market like Oman. So Oman might be slightly higher than that, but overall we try to keep it very much in line. And in terms of one particular customer, our concentration should not be more than 3 to 4% on that side. Does it answer your question?
Yes, thank you very much.
Okay, on the dividend side, the thing is that currently we have some. Uh, the dividend is because we have accumulated losses on our balance sheet, which prevents us from giving us a dividend. And as you know, the insurance regulation specify that any profit that comes has to be allocated first to the contingency reserve and and the legal reserve also. So historically, prior to 2015, there were some losses in the company, and the company was not transferring this contingency reserve because there was no profit available. Now that amount has to be transferred first uh, to the contingency reserve, which is an equity reserve, and then after that we can start transferring to accumulated losses. So unless for the foreseeable future we don't see any dividend, unless we have a major capital restructuring.
Yes, thank you very much.
Thank you. Romal, do you want to add anything?
No, no, it's clear. What you have said should be is clear, Muzammil. Thank you for
Okay.
clarification.
Okay. Unless if you have any other question, Aisha, if you don't have any other question, we will conclude the session. Okay, thank you very much. Thank you for joining today, and we'll come back again with the annual results with a more detailed outlook also on the next 3 years business plan that we are currently working on, which will give you a better understanding of the strategy of the company. Thank you for your time today.
Thank you.
Thank you.
Thank
Thank you.